Here's a handy seller tip for people selling their homes, but they have children. And what's worse than getting that last-minute call? I want to come see your house in 30 minutes. Well, you've got to gather everything up, clean up the house, and get out. All with the kids and the things that they need. Try this handy tip. Have two laundry baskets. One is to put all the toys in, the things that are played with. Just throw it in one spot. It condenses the clutter, makes your house great, ready to show. You can even throw it in a closet if you need to. Now the other laundry basket has all the necessities you need, maybe more than would fit in a handy carry-on bag. It would have extra diapers, have toys if you needed to go to the park, all the cleanup things that you would need, stuff to entertain the kids. You can leave your house at a moment's notice and have everything in your trunk, just walk right out the door for a great showing and a quick sale. You can find more tips at DarylBaskin.com. FHA, VA, conventional, all these different loan types. If you're a home buyer, what do you choose? Steve Currington, Currington Mortgage Group. Explain different types of loans in as non-technical a manner that you can.
Well, when you're choosing a loan program, it's actually become pretty easy, especially if you're a first-time home buyer, because the conventional products that are out there just aren't as competitive unless you're putting a big amount of money down.
So you're saying it's not as attractive, the conventional term that describes those loans. What is conventional describing?
Conventional is describing a loan that's not going to be guaranteed by the government in some way, shape, or form, by either the VA or by HUD or by the USDA
What's
Department.
the VA?
The Veterans Administration.
What's HUD?
HUD is the a branch of the government that really regulates FHA loans, USDA loans. They're the ones that are guaranteeing these loans for the lenders.
What's a USDA loan? You understand what?
Yeah.
This is what, it's so funny because we throw all this stuff around,
right.
and people don't know what that is.
Right.
And I'll sit and when I'll say, do you even know what I'm talking about? And sometimes I'll say, no, Daryl, I don't. And I said, then just stop me.
Right.
And please forgive me for using all these terms. But what is USDA?
USDA is it's a rural, what they call a rural housing loan. You'll hear it called USDA RD, rural housing, and it's a loan that's geared toward developing rural areas. The government guarantees the loan so that someone can put no money down on a home, and it helps develop areas that aren't as developed as, say, Tulsa would be.
No money down. You just said put no money down. Those loans are still available.
Yes.
You can get a no money down loan on a new loan right now, and most home buyers, I don't think, know that. But it can't be just anywhere. It has to be in what is termed a rural area. But describe some of those rural areas. It's not like way out of town.
Sure, you don't have to necessarily be out in the sticks and miles out of town. One thing that's surprising that a lot of people may not know is that all of Owasso is eligible for this program.
All of Glenpool too?
Most of Glenpool is eligible for that. Some areas, what they do is, like for Sapulpa, for example, if it's in the city limits of Sapulpa, then it's not eligible for that. If it's got a Tulsa address, it's not necessarily eligible, but there's little pockets in areas. If you get east into Broken Arrow, there's some areas over there that are in Wagner County.
How do you find out if you're shopping for a home? How do you look? Is there a map that's available? How do you do that?
Sure, there's a map that's online, and what we do with our customers when they come in is we give them that link, and we let their real estate agent know, hey, they are going to do a USDA loan. They want to put no money down. Here's the link. Before you go show them a house, let's make sure that it does qualify for this loan. Let's make sure that it's in a qualifying area.
Not only can it be a waste of time for the realtor, it can be a real letdown when a home buyer thinks this home qualifies and it doesn't.
It doesn't, right.
Keep going about these other types of loans. Okay, we've talked about HUD, we've talked about the Veterans Administration, a VA loan.
Sure.
Who qualifies for a VA loan, though?
A veteran. You have to be a veteran to qualify for a VA loan.
What determines eligibility?
If you are a veteran, then you're eligible for it unless you've been disallowed. Yeah, unless you've been disallowed for some reason. You know, if you were dishonorably discharged, things like that would disqualify you from a VA loan. What are the benefits of a veteran's loan? It's a 100% loan, just like USDA would be. It's very similar to USDA loan, except it does not have any geographic restrictions. The property doesn't have to be in an eligible area.
What about limits? An FHA loan, the Federal Housing Administration, does not guarantee those loans to an indefinite number. What's the cap?
In Tulsa County, it's $271,000.
That's a pretty substantial home
Sure.
to be buying on FHA.
Yep.
What's the benefit of going on an FHA loan as opposed to a conventional loan?
The biggest benefit is that the FHA loans are less credit score sensitive. So someone who doesn't have a 720 credit score but maybe has a score in the 650 range would get a better interest rate with FHA than they would conventional. FHA requires less money down than conventional would. They'd be required to put 5% down with conventional at the minimum. With FHA, it's 3.5%.
So if you buy a $100,000 house on conventional, it's going to cost you $5,000
Right.
for down payment only, not just your, or not completely. It's going to be your down payment of 5% plus your closing costs.
Sure.
So on FHA, it would be 3.5%.
Yep, so $3,500 on a $100,000 with FHA.
More questions here coming out of this. What are closing costs going to run you if you're buying a home?
What the buyers need to understand is there's a lot of things that are what they call closing costs that aren't necessarily costs that are going to your lender. Things like building your escrow account. We're going to set up on every FHA loan, we set up an escrow account for taxes and insurance for the customer.
What is an escrow account?
This is an account that your lender holds for you, that they set aside your taxes and insurance for the year, so that when you're making your monthly payment, a portion of that payment's going into this escrow account. When the tax bill becomes due, they just pay it for you out of that account. And the same thing with your insurance. When the insurance renews, they'll send a check to your insurance agent.
Now, an interesting thing for people to note when you're buying and selling homes, your insurance is paid in advance and your taxes are paid in arrears or after the fact. So
Sure.
you actually have a disparity there between what's going into escrow. When you sell a house, you can call and get your a refund on your insurance policy. But also when you're selling a house, there's that added expense that you're going to pay the taxes from the beginning of the year to the date of closing for that year, unless you're at the very end of the year. So it can be a little confusing, but it's really a very simple process, and your agent can help you decipher those numbers and understand what goes where.
Sure.
So on those closing costs, is there a percentage that you would say if you're buying a house that there's a certain percentage paid in closing costs?
The norm and what FHA allows and what, say, on a VA loan and conventional is typically they'll allow, if you're going to have the seller pay those for you as a customer, they'll allow up to 6%. Now, we don't always need those. When you get down into a lower loan amount, I would say under 70 to 80,000, you're going to need that full 6% number.
Because some of those costs are fixed.
Exactly. So they don't have to do necessarily with your loan amount.
But the higher you get up in price, an appraisal is going to be an appraisal,
Sure.
whether it's a $100,000 house or
Right.
a $400,000
Right.
house.
The higher you get in loan amount, the only real things that changes are some of your title fees. Title insurance is going to change based on your loan amount. And any origination that you might be paying to your lender is going to change with the loan amount, because typically it's based on a percentage. So insurance is another one that you pay a year of insurance at the closing table, and that's going to change. So that's why those closing costs can go up a little bit with the bigger the house that you buy or the more expensive house.
It's a good thing this is on tape, because you are talking fast, and that is a lot of information. Thanks
Sure.
for your expertise. Steve
Yes.
Currington Mortgage. You're watching The Future of Real Estate, Tulsa's source for local real estate news and information.
Be sure to catch the radio edition of The Future of Real Estate on AM 740 and FM 102.3 News Talk KRMG Saturdays at noon. And if you're shopping for a luxury home and want to sell one, find the best luxury real estate brokers in the area at TulsaLuxuryPropertyGroup.com. I'm Daryl Baskin. Thanks for being with us today. Buying and selling a home or commercial property, 258-2600, the Baskin Real Estate Specialists at McGraw Realtors. We'll see you next week.